Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
What you could do is use these patterns on the top of the chart here to trade some kind of breakouts, little small breakout patterns. We had a cup and handle working the last time I was here. The cup and handle, this is the actual pattern up here. We had a double bottom, we had a trend line. We were still up here at the top here. If you thought prices were going to go higher, you had the opportunity to go long. You also had the opportunity on a breakout of the bottom of this channel here for a stage 4 top. And as it turned out, if you did take that cup and handle trade, it was either a move from 156 to 159, or if you didn't take that trade, a possibility for a breakout here, or if you lost money on that trade because prices went sideways, placing your stop loss here limits your risk because you don't know that this is what's going to happen here. You don't know that prices are going to continue to decline. And now we're kind of set up here for a counter trend rally for the dollar. So the dollar's been getting its brains beat in for the last few months. There's a possibility we could have a little counter trend rally here. So you could take a break on a trend line here. So on the daily chart, we're basing above some kind of support level. An intraday trader could buy 126 calls for a possible trend line break with a stop loss or a protective put below 123. If you did buy the pullback to the actual support level below there at 121.50, close the trade if you go below 117. You're probably going to go back and down and test the prior lows. If you do take that trade, you want to use these resistance areas above here at 140 and 153 to close the trade. And if the trade stalls, though, and time is against you, then make sure you take your profit if you start to go sideways when you get to 140. Don't let that trade turn into a loser. We're going to go quickly here. I'm not sure how much time we have. I'm willing to stay as much as you'll let me, but
as much as you need, Steve. We're fine.
Okay, good. Well, this was our strategy back in June last year, where we were stuck in this range. We're looking to do some kind of selling of calls and puts. Remember, everybody's situation's a little different. You may not have the margin to actually do some kind of a right strategy. You may have to buy some protection above or below here if you do some kind of a writing strategy. But prepare for some kind of a breakout in one direction or another. And that was a spectacular move, too, for the dollar versus the British pound. And again, it topped out after a while. It kind of started trading in a channel back in November. But it had the possibility of breaking out and continuing this trend. Remember, I don't know if this is going to be a top unless I get a close below the bottom here. If it actually breaks out through the top, maybe this trend move continues, and then I've got a lot of possibilities on hedging, because now I've got a higher range that I can use for protection on my trade. We actually did break above there, and we actually went all the way up to close to 73.50 in January. And notice I wrote here, old resistance should become some support, and this other stuff was from before there. Now we know it's not going to be a stage 3 top. It became a continuation pattern. The trend continued higher. So I could protect this trade by placing stop losses or buying puts below the bottom of the support level, because obviously if prices trade through this support, we're probably going to go back down and start the opposite trend. So during January, the British pound actually made the 52-week high at the time, the dollar versus the pound, and the following week correction brought us back down to the breakout point at 69. So we went all the way to 70. Almost 74, pulled back to 69. But notice I said this is normally a good point to initiate a long position. However, and this is important too, the later a trend goes, the more likely that you're going to find the aggressive sellers. And that first new support level is always got to be broken before you can start a new downtrend. And that's actually what happened. Instead of finding support at 69, we actually pushed all the way back down to close to 66. And now this becomes a stage 3 top. It's an advance followed by a basing, followed by a drop here, up, sideways, down. And this becomes the opportunity to enter a new possible swing trade at the very beginning here, the reversal. We don't know if it's going to be a reversal. If we do enter by buying puts here now and we place our stop loss above the prior high, what's the worst that could happen? It's a small loser and prices want to go higher. We're wrong. When you look at it now on 7-7 here, obviously we rallied into this area and then we broke down here. We took out all the support at 65 and we began a stage 4 decline. Now remember, now that we're basing and dropping here, the opportunities are, if you want to buy little pullbacks to take what we call counter trend trades here, there's a possibility those will be good, but there's also a possibility when price comes up back to the origin of these big moves lower to actually short rallies in this downtrend. This was the best opportunity up here, and this could become a swing trade situation. But now, since we're way down here, and we're kind of in between where I'd be a buyer and a seller, you can actually do different types of trades. If it wants to be a nice counter trend intermediate term rally, you certainly could participate with a stop loss below these support lows, because if it does break the support, look, there wasn't very much to stop it from dropping all the way back down to this collection of orders down below near 51. So never fight the market. If you just place your stop loss here and you're wrong, it's going to be a small loss, and believe me, the longer you're in this game, the smaller the loss, the happier you're going to be. We kind of had a feeling that this was going to top out on our daily chart in February because we did make that top up here. And of course, that was the first clue that the uptrend was probably in trouble. And I mentioned back then in February that that British pound, the dollar showed a professional gap. A novice trader is invited to buy the top once they see the gap higher in price, believing that that trend is just going to continue higher. But the professional trader usually drops the bids right after the gap, which traps all the traders who bought the top and therefore forces them to cover. So all of a sudden, that's when you start to see prices fall pretty quickly because everybody that's up there on the top gets trapped. And so right then in February, we realized that that 71 to 73 area becomes resistance. And here we are right now on 7-7 today. We just broke a downtrend line here. If you were short from way up here, every time prices bases and drops a little bit further, I usually use that as an opportunity to trail my stop loss. Now obviously, if I break above this pivot high and I'm short from way up here, we're probably going to go higher and probably test these resistance areas above current price. So I don't want to be short anymore because now we've got a counter trend intermediate term rally going for the dollar. And believe me guys, every week it's the Chinese say the dollar's toilet paper. Then it's who's last week? The British.
Russians.
Oh, the Russians. Yeah, I missed the Russians, not the British. The Brazilians, yeah. So far, everybody has called the dollar, absolute garbage. And yet, the dollar's kind of found a little bit of support. So anyway, that's an opportunity, though, for you, this little trend line break. And if we're wrong, just make sure you use some kind of protection below 60. What's the worst that could happen? It might fall back to 58. What usually happens is it'll bounce on these little areas where these rallies originated from. I mean, we're right in the middle now. Obviously, the first time I was here, we were way at the bottom. Last time we were here, we were close to the top. So right in the middle here, you could have a nice little counter trend dollar rally for a while. So make sure you take profits at these higher levels above. And if you do take that trend line break, look for the resistance at 66 to 68 for targets. And if it stalls out, don't let that time go away from you. If it stalls out when it hits you the 66 area, then close your trade. And that's a nice little gain for you. Canadian, back in June last year, 624, we were looking for a breakout above the 104 level. This one stays range bound for 9 months down here, so there was a great opportunity while it was range bound to do some call rights and do some kind of spread strategies. And you'll notice right after it broke out, it actually based for a couple of more weeks, for actually longer than a couple of weeks, and then finally exploded higher. And all of this stuff here that happened here was all the credit crisis, which nobody in the world could have predicted. Okay?
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.